Hello traders, let's talk about risk management. Okay, risk management when though? Risk management when I go to the casino to play, or risk management when I decide to use an airplane to go somewhere? No, I'm talking about risk management when we are doing trading. When we trade the Forex market or the stock market or any other market. So let's get started. Let's think some factors that influence the management of risk. If you want, you can pause the video and think about them yourself, and then we can see them together. Okay, let me start. Do you think that leverage is a factor that affects the management of risk? I think you will have heard by now, by other lecturers, that leverage is a bad thing, is a dangerous thing, that you should avoid using leverage, or you should run away from leverage, or things like that. Do you think that leverage affects risk management? Yes. However, it is my opinion that leverage is not a factor of the risk itself, and I hope I will prove it. So, let's write leverage. What other do we have? Is the market a factor of the management of risk? Is the market good? Is the market bad? Where does the market go? Does it go up? Does it go down? Yes, the market is a factor of the management of risk. What other thing do we have? Is our capital also a factor? I think it is. Okay, we have leverage, we have the market, we have the capital. Do we have any other factor that we can think besides that? Is our skill a factor of risk? Of course it is. Of course it is. Our skill, it is our ability to do trading, to get profits, right? So, we also have skill. Okay, now that we have these four factors, which of them do you think is the most important one in the process of managing risk? Is leverage the most important factor? Is leverage more important than market? Is leverage more important than capital? Okay, let's cut to the chase. The most important factor by far of these four is our skill. It is our ability to bring in profits. Okay, number one factor is our skill. And I would say that it is the sole factor that determines risk. All the other factors are part of the risk management process. So I could put another number for all of them, but I will number them as such. So as to signify the importance and then the order which we are going to use each one of them to determine our risk exposure. Now that we defined the four major factors that we will use during our management of risk, and we have identified the most important one, which again is our ability to do successful trading, let's try to work on that. Let's try to quantify it. Let's try to examine our skill. But how we can do that? And there is a thing here. These factor is a little bit, or it can be somewhat subjective. It is like a personal thing. It is like asking ourselves whether we are good looking, whether we are pretty or handsome. Each one of us has his own beliefs. He or she might believe he is a top trader. However, we cannot trust ourselves. We cannot trust our beliefs. We have to have someone or something that can tell us objectively whether we are good or bad and how good or bad we are. Fortunately, this someone exists, and it is of course your personal trading log. It is the place where you keep all the trading that you have done so far. You have a trading log, right? But if you don't have a personal file, a personal log, don't worry. You can use your platform, the place where you do your trading. Personally, I use the MetaTrader platform, but any other platform should have equivalent functions. So, using the MetaTrader, we can go to the Positions tab and there select a specific time frame that we like that has enough amount of entries, enough amount of positions that we can use to calculate our progress. Let's suppose that we found that we have 100 investments or positions, and from these 100 positions, let's say that 60 of them were profitable, while 40 of them were not profitable.
Let's say that this is all our positions.
These are all of our positions, and 60% of them were profitable. Okay, I drew 10 boxes. Let's say that each box represents 10 positions. Now, here's an issue. Most people focus on the profits, focus on these positions, because it is what we want. However, our attention should turn to these positions, the non-profitable positions. It is these positions that will determine our skill, our ability, and in the end, our risk tolerance level. So with what we have said so far, we have profitable positions 60 over 100, which is 0.6, and we have non-profitable 40 over 100, or 0.4, and our total is 100. What I want us to do is to take this fraction and invert it. That would give us the total over our non-profitable positions, which will be like that. Total over non-profitable. But besides this fraction, I want to also examine another fraction. The fraction of our net profit over, again, our non-profitable positions. So the other fraction will be net profit over non-profitable positions. And let's define a little bit this and this. the numerators. What is our net profit? Our net profit is our wins subtracting our losses. Wins minus losses. Okay. We have two variables here, the wins and the losses. We can express the wins as a function of the total, as a function of the whole. So we can say that wins is 1 minus the losses, minus the losses. And that becomes 1 minus 2 times our losses. And this is our net profit. Now, let's also define our total. Total is our wins and losses plus losses. And we can do the same job again, same work, and substitute our wins. We can say that we have 1 minus losses plus losses. And these two cancel out. So our total is 1. Now, I'm gonna do one more thing before I move on. This factor, the net profit, I will erase this and I will call it something else. I will call it work. Work is the product of our trading strategy. It can be profits, but also it can be losses. So if we kept referring to the work as net profit, that would be confusing later on. So let's make a table and see how these functions progress. In the first column, I will put our losses expressed over our total. Then on the second column, I will put the work, as we said, over our losses. And in the final column, I will put total over our losses. Okay. Now, the first scenario that I'm going to consider is the scenario where we are non-profitable, where we have more losses than wins. And in particular, I will consider the extreme case where all our positions were losses. Everything that we opened failed. So let's put here 0 wins, 100 losses, which is a percent of 0. Subsequently, the next scenario that we are going to examine is the scenario where we are 50-50. We have 50 wins, 50 losses. 50-50. So our losses are 50%. Next, we will see the scenario where we have 60 wins, 40 losses. So our loss is 0.4. Then the scenario you have 66 wins, 33 losses, 0.33 for our losses. And you might be wondering why I'm putting all these numbers. There is a reason to it. Another scenario will be 75 wins, 25 losses. So 0, 25 for our losses. And at the end, we will consider the extreme cases where we are very successful and we have 80 wins, 20 losses, and maybe 90 wins, 10 losses, which probably will never happen. They are very hard to achieve. Okay, I filled the table for you. Let's see what these numbers tell us about our risk. Now, the second column is the work over our losses. This number is the percent that we can allow ourselves to put in a position so that in the worst case scenario, where let's say for example, in this scenario, let's say we open 40 positions, right? And each and every one of them loses, it's a failure. In this scenario, the maximum amount that we could lose is the work that our strategy can produce. And the third column gives us the maximum percent that we can risk per position, so that in the worst case, where again we open 40 positions and each and every one of them loses, in the worst case we lose the total of our account. And someone might say here, the total of my account? Wait, that's not a good risk management technique. I don't want to blow my account, and I would partly agree with that. However, it is more probable that not every of your 40 first positions will lose, right? To tell it in other words, if you're a conservative and sensible trader, this is the amount that you should be risking. However, if you want to gamble a little bit more, you are allowed to go up to this number. I tried to do some drawing and it didn't work that well. I drew the graph of the second column of the fraction of our work over our losses. It is very useful to get a visual intuition about how these numbers progress. What does this graph tell us? Let me put here also one. This graph tells us that in the case where we have, first of all, in the horizontal axis we have our losses, and in the vertical axis, again, as I said, it is our work over our losses. So when we have 100% losses, okay, what we see here is this case where all the work of our strategy, of our trading strategy, is being converted into losses. 100% loss. When we move on to the break-even situation, we have 50 wins, 50 losses. We can see that the net profit is 0. Now, as we move to, as we progress to 60 wins, 40 losses, let's say, we're in this case where we are starting to have profits. And what does that tell us? It tells us that for each, let's say that we play with the euros, right? For each euro that we lose, we get half of euro of profit. Now, as we move further to the case of 66 wins and 33 losses, then our work to lose ratio becomes 1 And this is an important point, and this is an important milestone, let's say. And as we further improve our strategy, in the case of 75 wins, 25 losses, our ratio becomes 2. For every loss that we have, for every lost euro, we generate 2 euros of profit. And the interesting thing is that the more you go towards the zero, the more you minimize your losses, this ratio explodes to infinity actually. So this is the case where we have 80 wins, 20 losses. So, again, what does this tell us? It tells us that, in simple terms, if your losses are more than your wins, if you're in this area, if you're here, you are supposed, you play only on demo, you do not play on live. However, when you progress and you are in this area, when you are in this area, you are starting to make profits. However, for each euro that you lose, you generate less than 1 euro of profit. It is still profit, alright? It is still profit. However, in this area, let's say that you are in a good path. You are a mediocre trader. You are having profits here, but it will be like the situation where you're struggling to make profits and then you make a position and lose most of it. And when you escape this area and move into this area, from here and on you are a successful trader. For each one euro or dollar that you lose, you are able to generate more than that of profit. To say it with other words, the numbers in the previous table are like speed limits that adjust themselves according to your ability. Let's say you are a normal driver having a normal car. The limit tells you that your car can take a turn with 50 kilometers per hour. However, you might say, well, I'm a very good driver and I have a very good car. I have a Ferrari and I'm like Schumacher, let's say. Okay, what the numbers in the table tell you is that a Ferrari maybe, let's say, can take the same turn with 150 kilometers perhaps an hour. And you're a very good driver. However, if you try to take that turn with 300 kilometers per hour, then you're going to have trouble. Okay guys, this was the first part of my videos about risk management that I want to make. I hope you liked it, I hope you learned something from it, and if you did, press the like button below and share this video with your friends, your trader friends, so that we can all benefit. And if you want, you can subscribe, I ain't going to press you. So, see you in the next video.